Hello and welcome to the Broker Power Up podcast, the AIME podcast for strategies, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon Haddad.
What's up, brother? How are you?
Very good. Very good. Very excited to be part of this and doing the first episode, turning Broker Power Up into a podcast where we can have a lot of discussions and timely discussions where we get to talk about what you guys are talking about, in addition to a ton of other fun things that we think of along the way.
You know what? I'm excited because the way you put this together, it's just very raw. And we obviously get to talk about some tea as we go
Yeah.
today. So I'm really excited for people to see that, plus see you behind the scenes, just being in front of it. You put a lot of this, all of it together, right? From that perspective, it's a passion of yours. You do a lot of stuff like this outside of work too, managing Discord accounts and all that fun stuff that I know you do and partake in. But I am excited, just real, raw, unfiltered content about the broker community and what we're doing. I think it'll be a really big hit.
Awesome. Yeah, I do too. I think this is, and do let us know in the comments, let us know in the reviews. This is going to be on YouTube. This is going to be on podcast platforms of choice like Spotify and Apple Podcasts. So audio listeners, you won't miss too much in these, but some episodes you will definitely want to tune into the video version. We have a lot going on today. The first, we're going to have 3 segments. We're going to have the Broker Buzz, where we dive into the top posts of the week from Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. What happened last week, get John's opinion on it, get maybe my homeowner perspective on what's going on. And we'll have a discussion about what you guys are having a discussion on in the group and continue those conversations. Next up, we're going to have a sales pitch training where John teaches me some sales tips, which is going to be super fun. And hopefully you learn as well from it. And then we're going to wrap up with our third segment, Storytime with John. Because everyone loves Storytime with John. In our VIP calls, in our internal team calls, John always has a story and it always hits the feels. And I don't know, it's motivational. So we're going to get into, but before we get into the first thing, we have a fortune cookie.
So
we're going to find out our fortune.
I dropped it.
Oh no.
But here we have it. Every episode, fortune cookies galore. Tommy's house and my house is filled with these now at this point. So here's the first fortune of our first episode. Please be a good one. And I'll give you the luck too for those of you out there. All right. Today's fortune. Such a good one. Laughter and joy are the true currencies of a rich life. And for those that are curious, the lucky numbers are 3, 21, 27, 29, 31, 34. But laughter and joy are true currencies of a rich life. What do you think about that?
Rich life is something that has stood out to me recently. I've heard it a couple times in a couple different places, and it really is different for everybody what they define as a rich life. Like, is their rich life being on yachts, going to the Super Bowl in the box, or driving a Maserati? Or for me, it's just being able to not have to worry about finances, but being able to take care of myself and those around me. And that is what I'm striving for in a rich life. And that's what a rich life is to me.
I love that. And I will tell you this, my thoughts on this have changed a lot over the years. I started making money at a really young age, and I thought, like a lot of people, it does help. Let me be very clear with you. It's like it helps.
Yes.
But when I keep understanding, people keep saying rich, laughter is rich. Laughter is what keeps the world going around. Laughter is happiness. And then what you start to realize is as you get older, you look back. And for me, I think what it is when you look back on your life, yes, of course, you remember tragedy, but I remember a lot of the moments where I was laughing really hard. And those were during times when I was a kid. Maybe things weren't as great, but regardless, I just remember the laughter. I remember my brother laughing. I remember my sisters laugh. I remember my mom's laugh, my dad's, we'd make fun of them, as they're laughing as we're getting older. And so to me, it has a lot to do with the fact that you have to start thinking about what does make you laugh. And yes, the money's important. I agree with you. I want to take care of my family, take care of my kids. I'm not going to sit here and pretend that money's not everything. Um, it helps a lot, and I get it. But at the end of the day, the laughter is what I remember the most. We didn't grow up with a lot of that stuff. So it's just a really good reminder that, hey, don't take yourself too seriously. I catch myself doing that a lot, unfortunately, especially in this role. But have some fun, have some laughs. I think about Fuse. You want to know one of my favorite moments at Fuse?
Hmm.
Hanging out with you and Kurt.
That was a special moment.
Do you remember the laughing?
Oh, it was all laughing,
dude. And that's what, like, don't you? But you remember the feeling, So
yeah.
like, and that was just the three of us,
Yeah.
kicking it in my room, and we're just having a blast and laughing and talking about life. But I remember that moment. I felt rich. I felt more connected to you guys, and
Yeah.
that was part of our next step in our relationship. So,
100%.
a lot that goes into it.
Absolutely. Yeah, that was a special time. But
Well, and are you making last thing on it too? I don't want to spend
yeah.
too much time in there, but I love. We're not going to get this deep on all these fortunes, guys.
This was just a good one. This was a good one.
But you also, in your life, there's people that mean a lot to you, right? And there's times where you might be tired, you might not feel like you have enough energy, but they need you in those times. And it's like, what I've learned from those experiences is when I do show up, it's crazy because the mood changes even for me, regardless of how I'm feeling. I had that a lot with my mentor, Stephen Luigi Piazza. There's days like I could tell, he was busy, he's tired, he's exhausted. The guy worked so hard. And then, Steve, anyway, can I just come over real quick? Oh, fine. I come over immediately. The tune changed right away. So just remember, some people need that laughter. They need that help from you. So go out of your way sometimes to really make sure they feel incredibly warm, because you don't understand what that can do for somebody. So I'll leave you with that.
Great advice. But let's roll into our first segment here. We have the Broker Buzz. So top discussions of the week in Brokers Are Best Facebook group.
Tommy, are you on the moderation in there?
I am.
Okay.
I am.
Guys, it's crazy.
It's wild.
I'm not going to talk about it because of my title. No one believes me. But Tommy, can you just tell people how ballistic this thing is? It's insane.
Yeah. So I've only recently gone back onto moderation. So my learnings are limited, but while I was in there, there's a lot of discussion. There's a lot of stuff going on. And so we pulled out the top 3 most common discussions that were going on. And so let's get into them. The first one this week is the director of the CFPB was fired. What are the good and bad things that could come from the CFPB going away?
Nothing like a recorded video of me talking about the CFPB to be used against me. Fantastic. So much. Look, I posted about it. Here's one. Everybody needs to take a step back, first and foremost. Okay. Like, just take a step back. It's not shut down just yet at the moment. They have paused everything. So the CFPB director was fired. Everything is currently on a pause. So anything that they were potentially auditing, anything that they were doing work related has been absolutely halted. There's multiple emails verifying that. So we know that for a fact. We also know that the director was fired, and I do believe somebody else was recently appointed. I don't know if it was yesterday, but I think I just saw some news recently about it. So good or bad thing, like everything in life, there's good and bad. And you guys are going to hate my political answer, but I really feel this way about the CFPB. I really, really do. We can't sit here and pretend that there wasn't good that came out of it. That is an absolute lie. You can see the data. There was billions of dollars that were given back to consumers that were truly taken advantage of. Be very clear about that. The other aspect of it, though, is you can't really ask the CFPB questions. You can't really talk to anybody there. You haven't been able to do that. You can't really look things up. There are certain things that are gray that people want answers to. And what happens a lot of the time is they would come in and just audit you and say, okay, here's your fine. But for the longest time, I can't call or do anything. And then what you find with the CFPB and a majority of it, and you can go look, they're looking at people that have a lot of money already. And I understand. You might say, well, John, that's the only people that can pay. I'm fair. But in order for them to get to that point, they had to do a bunch of stuff along the way that put them in the position to have all that money. So having the opportunity to even look at the ones that are on the smaller level that end up turning into these big companies that pay these large fines, there wasn't any oversight really for that. There were small cases here and there. So we do need reform. We do need change from that aspect as well. There are bad apples. I don't think bad apples are going anywhere, regardless of your industry. I don't just mean mortgages, y'all. Doctors, attorneys, you've seen the documentaries, you've read the stories. There are bad apples, unfortunately. I do believe most people have good intent. But I am hoping that there is a reform that comes from this. And in the event that it does go away, let's just say that, Congress, it passes and the CFPB is completely shut down and there's no longer around. Everyone's, what's going to happen? What does this? What the reality is, it will move to the state level. So the states are going to have to start imposing specific fines. I start thinking about states like California, New York, Florida, several others that already have more red tape than even the federal level when it comes to consumer protection. Particularly California and New York have a tremendous amount and even more fines on top of whatever it is that's done at a federal level. So it'll move to the states. The other thing that's fascinating, if this does go through, there's a lot of conversations that it might move to the GSEs, which means Fannie and Freddie would get involved in basically creating uniform across the board in terms of what is or isn't acceptable, which I don't think is a bad thing either. If they're saying, look, here's the black and white for us, here's what we need you to do, here's what happens if you don't do it. I really think it's important people understand the severity of the consequences for not protecting the consumers. They are the most important piece. I'm a first generation Middle Eastern American. All right. I saw the loan my dad got. All right. She shouldn't have got the loan. All right. So I know there's bad apples out there. I understand it. I've seen it firsthand. I saw the documents my dad closed on our house many, many years ago. So we do need the uniformity. We do need to make sure we are protecting consumers. But the last piece I'm going to leave you with is this. Yes, it's important to know what's going on so you can be educated. And it's important to educate your consumers if they ask. Because in the event that something does occur, you want to make sure you have all your facts right and you want to make sure you can articulate yourself correctly. But last but not least, the most important thing is you still owe a duty to your consumers to stay focused on the task at hand. And that should be your only focus right now. You can't control what's going on. Doesn't mean I'm not saying don't stay close. I'm not saying don't go vote. I'm not saying don't go write letters. I'm simply saying that don't lose sight of your mission, which is to protect consumers like you've already been doing. I look forward to hearing more about this. I am keeping a very close eye. I've had a lot of very deep conversations with people close to the matter. And we'll continue to let the group know, but we're not gonna run scared. We're not gonna be nervous. We're not gonna sit there. We're gonna be focused and we're gonna be ready to go. And whatever changes happen, we are ready to move with those changes.
Yeah, I mean, you said it. Education is everything. Like being on top of things, being able to provide that to
Let me
to
ask you.
your customer. Yeah,
I mean, honestly, I'm curious. When you don't do mortgages,
yeah,
obviously, right? You've been on this side of things for quite some time.
yeah,
What when you read it now, because you see it, obviously, you see it now
yeah.
because in the Facebook groups, you're working with loan officers. You have been for many, many years.
It's made its way into my YouTube algorithm. It's
What does it
everywhere.
do to you? Like when you read it as somebody that's not in the mortgage game, do you have fears as a consumer? Do you have what actually happened in your head, or where you're like, honestly, John, I really wasn't that big of a deal in my head, but I don't know everything about it.
I consider myself kind of blessed in that situation. I was able to get my house during at a couple years ago and locked in a really good rate. And so am feeling not stuck because there was no intention of leaving anytime soon. But if I was to move or have to move, then I would be more concerned. But it's one of those things where I'm blessed. I have the house. I'm fine. I have no need to move. But I'm talking with a lot of friends who are in that position of trying to buy the first house, and they're just like, the goalpost keeps moving. But
The
um,
will move. Now, do you think that has to do with the CFPB, or what
no,
is your take about the CFPB specifically in terms of what you read or saw?
that it all kind of went over my head.
It is, so but you see what I'm,
That stuff, like, this sounds important, but
and
from
that's
that level,
like, I talked to my wife about it. I've like, even my mom, and because that's how I kind of gauge a lot of the times. My wife knows obviously more because she's with me all day, and this is all I live and breathe. But like, and I don't think that's a bad thing. But for those listening, Tommy is close to it. He understands it. You know what's going on, but even you're like, I'm not sure exactly how this impacts me.
oh,
Just
if I was supposed to answer the question you just answered, no.
and that's the thing with the broker community. Most of your consumers are in the exact same position. That's not a bad thing, Tommy. Like I'm glad that was the answer. Just to
Oh
be,
yeah, yeah.
I'm like, okay, we're putting so much more of an emphasis on it than our consumers are. And to your point, I'm not saying don't be educated about it, but consumers don't really know what this means for them. That's just the reality. And you can pay attention to this for loan officers out there listening. Just when you're talking to them on the phones, because you do every day, and what I do with my teams, I always talk about, hey, what are they bringing up in the political climate right now? I always ask that question. I'm just curious. They talk to more, people than I'm doing right now, but we always have that discussion every single week. What's going on? What's the political climate? What are your consumers concerned with? This hasn't been brought up. There have been a lot of conversations just about the new presidency, which that's totally normal whenever this happens and there is an election and a new president comes into office. But they're not talking about the CFPB. They're not talking about those specifics. So just pay attention to what your consumers are saying. Be smart with how you educate them.
Yeah, absolutely. All right, you ready for the next one?
I'm fired up right now. I'm not
All
going.
right, let's go. What's a fair price to pay a processor that handles a file for you from start to finish?
Of course. All right. We have a lot of third-party processing companies that are part of AIME. We love you. Okay.
Processor committee is listening, John.
All right. Listen, there's multiple ways to do this. Number one, there's many companies out there that leverage third-party processing. For anyone else listening that might not be a loan originator, maybe you're an agent, maybe you're a consumer. Third-party processing companies, they have to also be licensed to be able to do a mortgage in the state that we need them to process a loan in. So if I'm licensed in Florida, for example, but I live in Michigan, my processor, if I'm doing a loan in Florida, must also be licensed in Florida if they're a third-party company. The other thing with a third-party company is the cost is passed on to the consumer if the loan closes. So for third-party processing companies, you're seeing prices between, honestly, I'm seeing $5.99 per deal all the way up to $12.99. And a lot of it has to do with what you want them to take off your plate. There are some third-party processing companies, they'll register the loan for you. So for real estate agents, consumers that are listening, that means they're going to make sure that that file goes to the lender appropriately, and it makes sure that all the numbers are correct, make sure that your file looks perfect, and it makes sure that it's registered the right way with the lender. They make sure that the rate is locked properly. They basically take that loan from start to finish and get you to the finish line, and they help the loan officer stay front end focused, which is what we're supposed to be doing and great at doing. I believe that's a very fair price, and a lot of the price negotiations have to do with what you want them to do. So $5.99 to, I believe, $12.49, $12.50 is the most I've seen, I believe. That is more than fair, in my opinion, for what they're doing on third-party processing, depending on what they're taking off your plate. But ask them questions. We have so many great ones as part of AIME. Go out and ask them. And you might be saying, by the way, I'm the biggest believer in processors. Biggest believer. I am a type A personality, high producer that didn't want anybody touching my files like so many people I talk to, thinking, oh, only I can work these. It's not true. If you want to do more business, you need somebody that can handle your back end for you. I was in retail for 6.5 years. My team was doing $1.2 billion a year with 12 people every year. And we did it by not touching our loans in process, just a couple touches here or there. It is a real thing, especially for mortgage brokers, if we want to gain and get to 51% market share, which is our goal. So yes, $599 to $1,200, $1,299 is more than fair. Have the conversation. Now, the other aspect is you can have processors internally, which means you put them on W-2, and then a lot of the structure, if they work for you directly. So they're not a third-party company. They work under me. They don't have to be licensed, but they can't talk rates and fees or terms or anything like that legally. For them, what I've seen across the board is a salary and then a bonus per file. That salary I've seen range, depending on the state that you're in, from $45,000 all the way to $75,000. I've truly seen it. And the per file fees I've seen between $50 and $250 per file. Your top processors, in my opinion, can handle 25 to 35 transactions, right in that range, comfortably every single month. But processing is going to be a huge, huge piece of the broker channel growing. I can guarantee it. And by the way, if you don't believe me, you're out there, you're a skeptic on what I'm saying, do me a favor, go find every top producer. Go find the top 100. I don't care if you go find the top 250. Call them. You ask them if they deal with their loans from start to finish. It's going to be very rare out of the 250 people that you find many of them that are doing everything by themselves every step of the way. So that should tell you all you need to know about the importance of processing.
More hands, more work, more.
I mean, you bought your house in what,
21?
21? Okay.
Yeah.
But when you bought your house, do you remember the process by chance?
Very little.
Okay. Very little.
It was a lot of phone calls. It was a lot of, I don't remember talking to a processor.
Okay.
But I remember talking to the broker and I remember talking to the real estate agent.
Perfect. You know, it is a big, important piece of the process, right? I don't know who handled your loan, nor should you say it live, just to be honest with you.
No.
But it doesn't matter. The point of it is, what was that process like? They got you to the finish line. How can you get to the finish line more effectively? The other thing for processors, for loan officers out there, I have really great relationships. I have a few people that they handle my business now, especially as I'm in the role that I'm in. The amount of time I've gotten back with my family, and I don't have a lot of time anymore to spend, but getting someone you trust is unbelievable what it does to your mental health. It really is. Like those Saturday calls, where you're with your family and you have to take the call, like you get it and your family gets it. My wife understands. She's been with me long enough and knows the industry I'm in. But getting someone like that you can trust, that's an absolute monster that can take a call for you. Oh, my anxiety, the loan anxiety, y'all, has gone down drastically. So pay attention to it. Go reach out to third-party processing company. AIME has so many of them. We'd love for you to check in with them. It's going to be very important for your business.
Yeah. Time is money, but also time is valuable. Time is precious. And so it's money, but it's also worth something.
Well, you know what? It is. And like, to give it, you know me, man, I love driving the points home, especially just so giving the perspective. This podcast, for example, okay?
Yeah.
How long did you spend putting everything together? Honestly.
Dozens of hours.
Okay. Dozens of hours. Do you think I trust you?
Yeah.
Okay.
100%.
You think I trust you?
I do.
And you're right. I do trust you. So when you brought it to me, what did I do?
Trusted me.
And?
Said yes.
Did I change anything?
No.
No.
I don't think anything's been changed, really.
No, it hasn't. And you know how much relief that is for me? And now I'm doing something that I love to do.
Yep.
That required me trusting you. That required me letting go and saying, okay, I've talked to this guy enough. I trust him. I think he knows where my vision is. I think he knows what I like. We've talked enough about that. So, all right, let him run. Let's see. And that's what you did. You ran. I looked at it. I said, dude, this is awesome. And it's the same thing for processors, y'all. Let them run. They might do something you don't like up front. You just coach. Hey, here, brother. Could you change this for me? Do you mind doing that? Can you fix this for me? Can you update this? But if you don't at least let them try and let go, and you're just hovering over them, they're not going to be able to show you what they can do. If I would have sat there and hovered over Tommy and said, oh, no, you got to make sure I don't like this. Can you change this script? He's not going to even be that excited to want to put this together for me. He's going to jump on this call and go, God, all right, here we go.
Here we go again.
That's it. You've worked in this industry long enough. Is that a fair statement for me to make?
Oh yeah, and I honestly, I think the trust is and allowing me to run is what's going to make this continue to happen. Exactly like you said, it's going to motivate me to keep going. It's going to motivate me to want to keep doing it, keep piecing things together, and I think it's going to turn into something that a lot of people can benefit from.
And it's brother, it's the same thing. I swear to you, with probably people don't get
Yeah.
there's no difference.
No. No.
And I wasn't always like this, and I'm still getting better. I am not a great delegator. I am getting much and better and more improved. But here's the truth. Guess what? There's a lot of people out there that happen to be better at things that you're not that good at. And that's okay. As much as I wanted to be the person assembling and putting the plan, guess what? I'm not that good at it. You know what I am good at? This. I'm great at having conversations. I'm great at making people feel good. I'm great at moving a direction. I'm great at sales. I'm really good at that stuff. So spend time on that. So I'll leave it at that. I didn't want to drive that one home. I mean,
No, absolutely. We'll drive it home at the end. We got takeaways to talk about at the end. But moving on to our final question for Broker Buzz, we got brokers are losing to arms from retail banks and credit unions. Why doesn't the wholesale channel have competitive options to compete against them?
Okay, so this is really easy. All right, there is it's called a yield curve. Okay, and when the yield curve is inverted yield curve, right? It's going under. What happens is that means the cost to borrow money, right? Like short-term money is much more expensive up front. So it throws out arm pricing. So why does that happen? Well, basically, the investors are saying, okay, well, if the 30-year fixed mortgage right now is, let's just say 6.99, and the arm rates are, let's just say 6.5, they're basically saying, why would we pay so much more on an adjustable rate mortgage when we know the likelihood the client refinances into a 30-year is unbelievably high because we expect rates to come down at some point in the near future. So again, logically think about their investment for a second. Think about it. If an ARM and a 30-year are very close in interest rate, and we are anticipating rates to come down, investors aren't going to pay us on ARMs that they believe will be refied within 6 months to 18 months. They're going to lose a lot of money that way because why? People get fearful of ARMs. More importantly, salespeople, unfortunately, there's a lot here that scare people with ARMs. I have an ARM on my house, just to be upfront with this group here. I have a 7-year ARM that I took. I got a 1.99 interest rate on my 7-year ARM. It made sense for me, okay? It makes sense for a lot of people, but right now the pricing isn't there. Credit unions and some of these banks, why can they do it? What they're doing is they're leveraging their own money. They're leveraging their own money, and they're basically handling it and keeping it as a portfolio loan. So imagine a credit union. Credit union is made up of member money for the most part, right? Members are putting in money, and that's how they're running the credit union consistently and constantly. So let's just say you have $500,000 with a credit union, and you go to the credit union and, hey, I'm looking for pricing. I'm looking for a loan. They see you have $500,000. So they go, okay, you have $500,000. We know rates are higher, but we have a portfolio loan based off your assets that you have with this bank. Keep your assets here with us. Please don't touch anything. Leave it alone here. And because you leave your assets here, we'll give you a 0.5 point off of your rate on an ARM. So they're getting a 5.75 at 0 points versus our 6.5 or 6.75, whatever the case might be. Why? Number one, they have the collateral. They have a lot of the money that is already in there from their members and from the person that's doing the loan. But number two, they're building their own portfolio loan. It's similar to how UWM is the 90% cash out, right? That's not Fannie. That's not Freddie. That's a portfolio loan. So they'll allocate X amount of dollars. Let's just say they say we're going to allocate $100 million this year towards pricing like this. So that's what's allocated. It's approved. And then they give it to certain clientele and certain people that have the opportunity to keep it. It also keeps them a very lifelong client. That's why you lose a lot of jumbo loans right now, very similar to jumbo loans. A Wells Fargo or Chase, if they know, let's just say their jumbo rate right now is 6.5. All right. And it's $1 million loan. But Wells Fargo says, okay, I know it's 6.5, but how about you pay us 5.5? because one, we want to earn your business. I'm doing you a favor as a client, but you're still paying me 5.5% on $1 million and keeping all your money with me here. You're keeping your assets with me. You're keeping your house. We know the likelihood you refinance again is very high. So we're not going to see much changes on our end until we see the yield curve get out of the inverted that it's in right now. That is going to take still more time. I was hoping we got some kind of love here soon, but inflation numbers and the reports are higher than anticipated, which we kind of felt that coming with the policies and the changes that have been put into effect. So ARM rates, they're still not here. Credit unions, banks, that's why they can do it. It's not for everybody. If your consumer's telling you, oh, I have this, I have that, I mean, you got to have a pretty strong profile, and you got to have, for the most part, pretty significant amount of money in the bank in order to take advantage of loans like that. But if they do, we had a client the other day, had a lot of money with a certain investor, won't mention a name. I told him to go check with their investor. I said, hey, look, I got to do you a service. It's just important you check. They gave him 0.5 point lower than I can give. It didn't make sense for me to do his loan. It just didn't. So just be cautious, be aware, be understanding, and educate.
Absolutely. No, that's awesome. Yeah, there's this is another thing that just went over my head and wasn't quite sure.
Let me make sense the way I explained it.
Yeah.
Okay.
No, it made sense the way you explained it for sure. It was one of those things that when we were gathering the questions, I was like, I'm not too sure on this one.
Mm-hmm.
So awesome. But that's it for our broker buzz this week. We're going to take a quick ad break, and then we'll be right back with some sales training. So see you in a sec.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com/membership. Your community is waiting.
All right, we're here to do a sales pitch.
Are you ready?
I'm ready. I'm ready, John.
So today, sales pitch is also part of the story, and it's about reciprocity. Mm-hmm. And reciprocity can be leveraged anywhere you want in your life. And it doesn't mean you're always going to get the meeting that you want. It doesn't mean that you're going to get what you think you want out of it. It just means that this is such an easy way to enter into a conversation with people on building that relationship up front. So I'll start with real estate agents because that's what our industry knows. But then I want to show all of you how it doesn't matter the industry. I can jump into any industry right now. And Tommy, you'll see it here live. Sure. And we leverage reciprocity any way to get the meetings that we're looking to get. So most people, for example, call real estate agents. And when they cold call agents, I've heard it 1,000 times, cup of coffee. Hey, I'm a local lender in your area. I'd love to get a cup of coffee with you. I have a bunch of new products, and I really think you're going to like them. Does that call sound familiar?
Yeah. I've heard that a dozen times. And
How many times have you seen people post in our Facebook group about it?
yeah.
How many?
It's the same thing. I don't too high a number.
Now, before I go into reciprocity, what does that word mean to you? Just out of curiosity.
It's a big word.
It's not where I thought you were going.
No, it's a big word. And I was going to Google it, but I did not.
You're good. Yeah. So reciprocity is, you doing something for somebody else and you don't really expect something in return, but that other person kind of feels sometimes like, okay, maybe I should do something. All right. So
that is something I do. That is something I do for
you
sure.
do a great job of it, right? And you do it subconsciously. It's like people like to return favors to one another. They really do. Most people don't ever want to feel like they owe somebody a favor. So real estate agents, right? Same thing. You go into the call. That's how the cold call starts. I can't tell you how many times I've heard it. I've practiced it. So imagine instead you go into the call with reciprocity and you go into the call and you say, hey, Tommy, my name's Jonathon Haddad. I am a lender, and I know you get blown up with calls. I'm not here to step on any toes. I'm just curious. Over the last 5 years, did you know that you've lost 5 clients who used you the first time around, but ended up using a different real estate agent for their second transaction? Did you know that by chance?
I didn't. Why? Who?
So I'd love to give you this information for completely free. Do you remember the house on 123 Main Street that you closed June of 2023? The client's last name was Mrs. Smith.
Of course I do. I go to church with Mrs. Smith.
Okay, believe it or not, they sold their house and just bought a new one and closed last month.
I did not know that.
So that's what I've been doing. I've been calling real estate agents and showing them these opportunities just to help keep them in front of them. And we're doing this at no charge to the agents. We do want to make sure we're partnering and working with the right people, but I'd love to show you access to this. Can you verify your email for me?
Sure. It's Tom. Yeah.
Do you see the difference in the way that call was, right? And what that is I'm giving you something, okay?
Mm-hmm.
I'm you and saying, hey, you don't even meet with me, just here. Did you know this? And some people might say, well, John, what if they just say no? Well, if they just say no, does that sound like an open-minded realtor to begin with?
No. Why would no?
And that's exactly it. So if they say no, I already know that this is going to be just
it's a waste of time.
It is for the most part, not all the time.
Sure.
Free. But if I call somebody and they're like, oh, I already know that. Oh yeah, I have that. Oh yeah, I have that. Okay, you have everything. You have everything, but for some reason you're not the number one producer in the country right now. All right, great, but you have everything. Like that's how I feel about it. But that's reciprocity just from a real estate side. So when you're making that call, you have a minute and a half, if that, to make an impact that you need to make. How do you do that? Immediately have to go into it. Tell them who you are, and then boom. You just jump right in. So super simple. And then the other piece of it, and I don't want to give them away, each week we're going to go through a different sales tip.
Yeah.
But the other piece of it now, okay, you do that, you get the meeting. Now, once you get the meeting, I think the biggest area that people make mistakes is they don't manage expectations up front. So let me give you an example.
Wait, quick question. You didn't ask them for a meeting. You said you weren't asking them for a meeting.
No. Once you build it, let's just say you get the correct. I'm not doing that up front. Up front, I'm sending them that email. Hey, here's what it looks like.
And then a natural conversation can flow. And
correct. That's a different. I'm saying after that, you get the meeting. Here's another area. So reciprocity is how it starts. So reciprocity is the first thing you need to do. By the way, this is like any room you enter. This is any networking event. This is anywhere you can do this. That's step one. From there, you build the relationship. Let's say you get the meeting now after a few conversations, whatever it is. Now, when you get the meeting, where people drop the ball is they beat around the bush. So here's what most people do. Thank you for taking this meeting. I want to show you some of the stuff. Stop and just be honest with them. Hey, Tommy, listen, I know we've talked a few times. I know you sent you that list. I know we've been talking, and I can't thank you enough for this meeting, but I want to just make sure we're on the same page. So to address the elephant in the room, Tommy, understand that my end goal is absolutely to earn your business. Okay. But here's the biggest difference with me versus everybody else. Number one, I'm going to tell you that I'm here to earn your business like I just did. And number two, I use the word earn, and I don't take that word lightly. I know how good your other lenders are, and I don't want to step on their toes, but I want to show you how I can earn the right to work with you. So before we start the meeting, I just want to make sure, are those two things fair?
Yeah. No, that is, I think, the appropriate way to lead it off, and I agree with you completely because it's very straightforward, it's very honest, it's very not, and I'm not sure how much this is industry specific, but it's kind of taboo, right? And I'm against this taboo, but it's taboo to talk money
Mm-hmm.
with peers. And I'm so against that. I push against it every day. And I think it should be more discussed and it should be more talked about because there's a lot of things that people should just know that they don't. And they're thinking they're doing the right thing, but they're not. And being upfront and honest like that, it's like we were talking about before, like between me earning your trust and you earning my trust. And it's the same thing. It's the same tactic. It's the same give and take.
It, it, and that's I love that you grab that because that's
Yeah,
a,
surround yourself with people that can make you better.
and it's that simple. And it's like when you tell them it like that, it's a whole different conversation, and they understand it. I'm not saying it's going to happen today. I'm not saying you should feel like you should send me. I'm simply saying here's my expectations. Here's where I'd like to be. Let's set the tone up front. You already know what I'm looking for long term. Let me
Yeah.
just express it, but let me also show you why I believe I can earn it.
Yeah, like let me be on your team. I don't want to take over, but let me be the designated hitter. Uh let me be there on the team and then show you what I can do.
It is, man. And and here's what's crazy, right? That all starts with reciprocity up front. So you might be saying, okay, how do you take this into any field that you want? How do you do this into anything that you want to do? Okay. Do we have gamers out there in the world, right? You're a gamer, right?
Oh yeah.
You're a gamer. Gaming my whole life. When you're gaming with a team and you're doing a raid or you're playing whatever it is you're playing, there is a level of trust that you have to have amongst each other if you want to be really good and great at what you do. You're constantly doing things from a reciprocity standpoint because you got to help the team out. You got to do something for someone else and they do something for you. The best teams are the ones that understand that. And you get from a gaming standpoint, for those of you out there that have kids and you watch them game, the kids that are just worried about their own stats, their teams never win, ever. You see them complain online all the time. Oh no, I had 30 kills, but our team still lost. There was no reciprocity.
No.
They're not playing as a unit, as a team. I can do it with gaming.
Yeah.
You want to be an attorney. You want to work for a top law office. How do you get into that office? What do you do? I sent them my resume. You got to go deeper than that. What do they love? What do they like? What can you do for them? How can you show them your work ethic?
Yeah.
My business partner, his daughter, okay, won't go into too many details, but his daughter's playing volleyball right now. She's crushing it. She's doing amazing. She actually was she worked so hard to get to the position she's in to make the team. She had a long journey to be here, understanding defeat and going back and coming back for more and doing all this. Now she's embodied in the team. And what did she do the other day? The other day, she does a Google form. She loves to braid hair. So she sent it to the girls and their moms. And she said, hey, have your daughters fill out this Google form with the way they want their hair braided. What do you think that did for her in terms of the love and support she got from her team? You think that made it go up or down?
Up. For sure.
And now that extra support, you feel it. And when you're in that space, that's confidence. When the people around you trust you, there's confidence in what you're doing. So reciprocity goes very deep. So when you're entering a conversation with the real estate agent, what do you have from a reciprocity standpoint that you can give? When you go to a networking event, what do you have from a reciprocity that you know you can give? People don't think about it. There's a process to sales, and it starts with reciprocity. So that is my sales tip for you. That is what I wanted to talk to you about today. Implement it into your business, regardless of the business that you are in. If you're a real estate agent and you're calling consumers and you're cold calling, what sets you apart? Hey, I'd love to list your house. Well, so would everybody else. Hey, I think I'd be a great fit. Well, that's what everybody else says. Hey, can we get lunch? You and the rest of the world.
I have lunch booked through the rest of the year.
That's it. You know it's happening. So stop, get out of it, and figure out what you can do to provide value. But John, I don't know. Well, like, what if I spend money and I don't make money? Tough luck. That's what this is. That's what happens sometimes. You got to be willing to put that step forward first, especially if you're the one that wants the meeting. The agents aren't calling you. They're not calling you. You're calling them. It drives me up the wall, team. It drives me up the wall.
Yeah.
John, I've built packets for them. I've gone to open houses and I give it to the agents. I co-market myself. They don't even know. I'm like, hey, this is for this house specifically. I put down a list. It's a first-time home buyer packet. I co-branded it with you on the back. You can do what you want with these. These are 10 copies. I'd love for you to put them out there, but I totally understand if you can't. I've never had one person tell me no. They've been, oh my God, thank you for doing this. And they just put it down for me. You know how many relationships I've built from that?
Tell me.
An absurd amount. Matter of fact, actually, that we're here. I want to share this text with you that I got from one of my agents that she sent me, and she's in Nevada. She's in Nevada. I'm in Michigan. She won't ever go to another person, ever. And I just want to read this text from you the other day. I've been working with her for quite some time. I know you're enjoying Orlando, but I really wanted to tell you I appreciate you so much. Thanks for always having my back and doing what you can for me. I can't thank you enough for helping me out, and I value our personal and work relationships so much. Thank you for helping me grow as an individual and in my business. You've taught me so much, and I continue to learn consistently from you. Even though I'm on the other side of the country, thanks for connecting me with your amazing team. I wouldn't be where I am without you guys, and I really mean that. Enjoy your time. Tell your wife I said hi. She's in Vegas. How many people out there can say their agent send them texts like that?
Yeah. And you know what really stuck out to me? The difference between, and I've noticed it a lot in just the difference of a response. Instead of a thank you, you get a I appreciate you. The difference between a thank you and a I appreciate you is huge. Like you hand someone off something, right? And they're like, "Thanks," or like, "Thank you." And you're like, "Cool, you're welcome." But when you get a I appreciate you, that's
Never thought of that before.
Yeah.
I love that.
Yeah. But yeah, those texts make it worth it, right?
It's
not that it's not the only thing that makes it worth
no, like, but they do keep you going, man.
Yeah.
Like, you know, it keeps you going. It keeps you inspired. It's like I'm making real impacts. And it starts with how you initiate that conversation up front. And that's why I hate the negative connotation that sales has got over the last 5 to 7 years, where you've heard me say it 100 times. I'll say it 100 times more. Matilda's dad, right? People are in the Matilda's dad, where he's the sleazy car salesman and he's putting duct tape on the bumper. No, great salespeople are high-level communicators, and what it turns into is to powerful relationships. That's really what happens. Because if you're somebody that's dialed in constantly, you have the ability to make connections for so many other people.
Yeah.
That's what I'm known for. That's why people enjoy working with me. I'm a connector. So it's a really big deal. So between Tommy and I, my kids are losing it outside of my door, and his cat, I was just informed, is losing it outside of his door. So it's been quite a field day over here.
Oh yeah, just fielding the farm.
They're looking for reciprocity right now.
They are. They're like, hey, what have you done for me lately? You fed me 20 minutes ago. But
yeah.
What have you done? But all right. Well, I think that was a good sales pitch. Let's roll an ad on Unify events that are coming and rolling out shortly. Make sure you scan the QR code and check that out. And we'll be back with Storytime.
If you're an independent mortgage broker, real estate pro, or home ownership advocate looking to connect with like-minded professionals, AIME is here to give back. If you're an independent mortgage broker, real estate pro, or home ownership advocate looking to connect with like-minded professionals, we have the perfect event for you. AIME is proud to bring you Unify, completely covered by AIME directly. Unify is AIME's local networking and education series designed to help you and your community build more referral relationships to grow your business together. Each event offers exclusive content focused on a topic shaping the mortgage industry with brief but powerful presentations from experts who have been in your shoes. Expect high-energy networking with real connections happening with real conversations. Plus, we're raffling off some pretty unique prizes at each and every event. Join the AIME's wholesale mortgage community, real estate professionals, and yes, even retail mortgage professionals. We want you there as well, because we know that we can make a difference in our local communities by connecting and having conversations together. This isn't just another event. This is where community meets opportunity. Whether you're looking for business strategies or the right people to help you level up, Unify delivers. Register today and join us for free in Dallas, Texas on March 25th and Phoenix, Arizona on March 27th, with many more locations to come. Just go to unify.aimegroup.com to get started. Now hurry up, spots are limited. Don't miss your chance to be part of something bigger.
All right, and we're back. So now we have story time with John.
I have two stories for you today.
Okay.
Both stories are about reciprocity. And there's one from a long time ago, and there's one from modern day.
Okay.
Reciprocity has been around for thousands of years. It's actually very well documented. All the sales tips I'll give you over the next 5 weeks are legitimately the 5 things that I have done and built the framework around when it comes to any conversation that I've ever had. So the first story is about Mr. Benjamin Franklin. All right. 18th century Ben Franklin. Yes, that Ben Franklin. Now, you see, Ben Franklin made a lot of drastic changes for this country, as I'm sure you're very well aware. Now, at the time, there was an individual who was a legislator that was giving Ben Franklin quite a lot of grief. Didn't like him at all. Disdained him, was against all his policies, made it really hard for Ben Franklin when it came to going through certain bills and certain things that he was trying to get done. So Ben Franklin, they tried to have conversations on, multiple times. It just wasn't getting through anywhere. There was just such a huge disconnect between the two people. So Ben Franklin, being the person that he was like, you know what? Instead of confronting him and continuing to confront him, let me take a different approach. And this is a well-documented story. What he did to this legislator is he knew that this legislator was a rare book collector. And for those that don't know, Ben Franklin himself was also a rare book collector. Some of his books are still on display in museums across the country. So what Ben Franklin did is he said, you know what? This guy, I think, has a book that I don't have. And he did. There was a specific book that Ben Franklin wanted to read. So he reached out to the guy and said, hey, basically, I understand, this has nothing to do with our work side of things. There's a book that I'd love to read. I'm an avid collector. I just want to read it. I'll return the book. The guy was taken a bit back by it, and he said, you know what? Yeah, you want to learn? I mean, I can put our differences aside for that. So he gives him this book. Ben Franklin reads, finishes the book. But when he returned the book, he wrote a really long letter to the legislator, basically thanking him and going into details just about the book and a bunch of other things that he put together. The legislator was so taken back by the letter. He was like, what? Why? I can't believe this. What happened is that the amount of respect and kindness completely pivoted towards Ben Franklin after that. Matter of fact, he wrote a quote about it after it was done. And the quote that he wrote was this. I don't want to mess it up, so I'm going to read it here. He that has once done you kindness will be more ready to do you another than he whom you yourself have obliged. He wrote that after this specific situation occurred. And even he understood that back in the 18th century, that reciprocity put him in a position of influence and gave him more influence as opposed to him continuing to confront and not getting anywhere with this person. He found something personal and he had reciprocity. He got something borrowed and he wrote back a beautiful letter and gave the book back. And that changed their mind. 18th century. We're talking about shaping the United States of America, my friends. And it was leveraged. Now, a more modern story. Costco. This is a strategy that's used not just at Costco, but at so many large, massive brands. You see, most consumers, when they go in to these stores, right, you have your shopping list. If you're like me, you write it down what you need, milk, little things for the kids, snacks for you, your food for the week, whatever it is, you go in. Now, at a lot of these large stores, they have something there. These places have the little spots that give you samples of food. Sample this drink. Sample these crackers with these cheese on them. Sample this, sample that. Do you know there's a real science to it? Do you know why they do that? There's a method, there's a marketing method that you can all look up. It's the fact that they believe subconsciously you're going to feel bad that they just gave you free food. And in turn, it actually increases the sales on the product that they are giving you for free. This is proven methods. This is proven marketing. It goes up. Your likelihood to buy the product you're sampling skyrockets by them simply giving you a free sample. Now you see, all of that's intentional. Reciprocity has been here for a long time and it's not going anywhere. You can get mad at it all you want, but it's here to stay. Now, how do you leverage it? How do you understand it? And how do you make it part of your everyday life? Because you are, in fact, a sales professional, whether you like it or not. So be that, act it, and never forget it. Those are my stories. I appreciate you all very much, my friends. Thank you, Tommy.
Yeah. No, so it's almost like it's a part of human nature to react that way. If it's been going on this long, it's just what popped into my head when you were talking about it was almost like a white hat social hacker, like social hacking, how you like when you're networking and you're talking with people, it's a way of kind of hacking into their network, right? You're hacking your way in, for a lack of a better term, but white hat means you're doing it the responsible way.
Listen, white hats are fun. For those that don't know, these people, they try to break into your systems responsibly too. It's a big thing on the tech. It's a real thing, by the way, in case those don't know out there. But you are right. It is part of time. There's another really good one. I wasn't sure I was going to go back, but it's about Galileo. And he basically met up with this king one time. And when he met up with the king, he went to him and he said, "King, wait, first thing I want to show you is this." So he brings out his telescope, right? Very new to the time. And he looks up and he says, "King, look, that's your star. I've named it after you." And the king goes, "What?" He goes, "Yeah, this is your star. Like, here's why it's your star. Here's why I believe it's your." The king went crazy. He goes, "Oh, what are you talking? Oh my God." How do you think he treated Galileo for that next week?
Pretty good.
Leave. I mean,
he gave him a star.
He gave him a star. You nailed it. This king was gifted a star. And in return,
he'd never been given before.
Never one time. He didn't even know you can give stars away back then. And in return, Galileo had the time of his life. I will leave it at that. For 1 week, go read the story. It's a real story. And you can read some of the intricacies of that story. Some might not be safe for work. So I'll leave it at that.
Well, great story. We're going to roll one more ad and then we'll be back to close this podcast out.
Fuse is just around the corner, believe it or not, another year down. And we are excited for the largest event of the entire wholesale mortgage industry. Fuse National Conference 2025 is taking its show on the road. Now emanating from Nashville, Tennessee, from October 23rd through the 25th. This event is all about sales, sales, sales. Don't miss the chance to join us in Music City for 3 days full of the most cutting-edge content we've ever produced, featuring the industry's top minds, leaders, and innovators. Access the newest tools and resources from wholesale leading lenders and vendors. Take part in our acclaimed workshop summits for free. Catch wholesale's rising stars in their very own breakout sessions. And of course, take part in the best and, quite frankly, the most fun networking opportunities you'll find in the wholesale channel. Join us to grow your network, your skill set, and your business at what will no doubt be the greatest Fuse conference yet. Go to fuse.aimgroup.com to sign up and receive updates when tickets go on sale. Secure your hotel room and get your Fuse tickets for free. That's a $600 value for the prices as low as $199 when you sign up for an AIME annual membership. Don't miss your chance to be there when wholesale history is made at Fuse 2025. I can't wait to see you there.
All right, and we're back. Want to drive home some takeaways. So we had 3 segments this week: the broker buzz, we had the sales pitch, and we had story time with John. So broker buzz, what's the real takeaway? Like from all the things we talked about, from the CFPB to processing to the arms, real quick, what do you think should be the takeaways?
The biggest takeaway for this episode is really simple, in my opinion. The noise is never going to go away. At the end of the day, you have to continue to refine your sales strategy and your sales acumen and be the best sales professional you possibly can. Because regardless of what happens in this industry, the industry is still going to be here. The difference is, are you? And are you willing to adapt to whatever changes are that come your way? And are you willing to practice them? So pay attention to the noise, at least have it on your radar, but never let it be your focus.
There are a lot of people trying to be the best out there. So you got to try your best to be the best. Absolutely. Yeah. And story time, reciprocity. I learned what it means.
Reciprocity. Easy
It's
stories.
huge. It's huge. It's something to think about for sure.
It is. It's part of all your conversations. You'll start to understand it more. And also, too, like you can tell when someone else is doing it.
Yeah.
Which isn't a bad thing. Like I enjoy it, right?
No.
So that's just something to say.
Yeah, absolutely. Well, thank you, John. Thanks for tuning, and thank you to the listeners for tuning in to the first episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor, hit the like button. Let us know you enjoyed it, which helps even more people see this content. Subscribe to the YouTube channel. We're going to be populating it with all of these videos and many more videos from AIME. So if you are an AIME member, if you are an AIME follower, make sure you are following us there on YouTube as well. And ring the bell when you're on YouTube so that you get notified. You can get a phone notification every single time AIME puts out a video, so you won't miss an episode. And remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.